what's happening in the market. Just picking on a couple of important things. We talked about occupancy, we talked about vacancies, and just a few days ago, the reliable TPN residential vacancy survey report came out for the second quarter of 2024. It obviously comes out with a lot of delay, even if today we're starting the first day of the fourth and final quarter of 2024. And it has been quite interesting because a lot of articles in the newspapers basically came out as vacancies increase in South Africa. And that's because I think I'm now convinced that a lot of media, radio, business news, business newspapers, they have a deliberate interest in getting people not to buy property because they want you to buy some of the stupid financial products that they offer. Truth is that when you read past the headline, we have now across the country experiencing in Q2 24 a 5.6% vacancy ratio, which is the lowest vacancy ratio since 2016. If you remember the last Hacker Show, we talked about how the PayProp report indicated that we're having rentals going up on average 4.6%. So rentals are going up in excess of inflation for the first time. Vacancies are at almost a decade low, and that shows that the rental market is in very good shape, and the rental increases have started to come through, and I think will continue to come through for the foreseeable future. And like always, I always like to say lies, big lies, and averages, because yes, on average, the vacancy ratio is 5.6% across the country. But I wanted to touch upon the 4 biggest provinces. Again, I'm quoting from the survey report from TPN, and you can see here that the variances are massive, absolutely massive, because you can see here that the Western Cape has got vacancies, obviously based on the sampled data of TPN, of 1.5%, which effectively means there are no vacancies, which talks to the fact that there are multiple bids on rental properties coming available in the Western Cape. Gauteng, 8%, that's more or less the historical average across the South African property market. So if you look at a long-term average of vacancy, 8% has always been the average. So the Gauteng rental market, I would say, in a state of balance between supply and demand. But then you've got situations like KZN in the Eastern Cape, where vacancy ratios are definitely above average, are at high levels. In KZN, I would say alarming levels. So it simply means that, well, if you are looking to buy in KZN for investment purposes, you should plan and expect, at least for the foreseeable future, a higher vacancy ratio, and you should provide for that in terms of your calculations, in terms of your cash flow and your cash reserves, because the vacancies are higher, and when vacancies are higher, you start seeing landlords dropping asking prices, and that can result in basically rents coming down or not increasing for a very, very long time. So an important snapshot in the rental market, I always like to analyze the rental market, because, well, the tenants are the ones that pay our bills. So I want to really make sure that we understand what's happening on that side. And I always say, when you choose an investment area, always make sure that you start from a very, very solid understanding of the rental market. That is going to serve you well today, tomorrow, and for the foreseeable future as a property hacker. Now we're looking at the other flip side of the coin of the property market, and we have recently seen a new Lightstone report that goes back to July. Again, the slight delay in data is not my research is late, is this data as it comes available. And we're starting to see a definite pickup in the market, on average monthly 0.5%. So if that continues, it basically means that on average is 6%. 0.5 times 12 months will give you a 6% increase. We have seen the yearly rate growing in the last few months, is now at 4.1%. I expect that to continue to go up, also considering that this was done before the GNU, before the recent reduction in interest rates. So certainly there is a pickup in the appreciation of house prices, but once again, it is not homogeneous, is not the same. And if you look at the April data, which is the latest breakdown that Lightstone gives us, well, you can see that in Gauteng, we have 0% growth at this point in time. In the Western Cape, you got 4.4%. So there's a quite a distinct difference. But I also like to go down even to more granular basis. And if you look at the April data at the metro level, Cape Town, about 3% growth, which gives us an idea that at this point in time, a lot of the growth in property prices is happening in the Western Cape, outside Cape Town. Joburg is the worst performer, is seeing a reduction in house prices of 1.3%. That you can read for yourself. Tshwane 1%, Kuruleni 0.1%, eThekwini in negative territory, Nelson Mandela plus 1.4%. So this is the latest snapshot of the house prices and rentals in South Africa, according to reliable providers of data. And I wanted to show you something else as well, because sometimes you're coming across articles that are saying property prices are up 1%, but I've just shown you that it's up 4.1%. So who is true? Well, the property, but a lot of newspapers are quoting the FMB house price index, and the house price index, the latest one that came out on the 10th of September, so it's only like 20 days old, says in the last year, FMB house price index is up 0.6% for the whole year. Now, where's the difference? And I think it's important to understand the difference. The difference is that FMB only looks at transactions that are bonded with FMB. And this is a small snapshot of the market for two reasons. One is because FMB has got a certain market share of the bond market. Let's say it's got 20%, but also because 40 to 50% of the property transactions in South Africa are cash purchases. People forget that 40 to 50% of purchases are cash purchases. So FMB data only captures a very small amount of bonded transactions. That is not a true and accurate reflection of the overall market. So I'm only showing it to you so that you don't get confused, because people will show you the data they want to show you in order to influence their decision. So I hope this helps. That there are multiple sources of data, which is great. It's great that we got multiple sources of data. And one piece of data that I absolutely love about the FMB property barometer is the amount of time a property stays on the market, because currently the average is 12 weeks and 2 days, which is 86 days. Now, the long-term average is 12 weeks. So we are on average on a balanced market between supply and demand. But we've got a Western Cape where is more demand than supply, and we've got Gauteng where there is more supply than demand. Unfortunately, we don't really get a lot of insights in terms of time to market per province, but I'm going to dig out that data one of these days, and you'll be the second one to know. So let me know if there is any comment, any question. And I always say, and I will continue to say that yes, it's good to know what the market is doing, but we always overestimate the change that will occur in the next 2 years, or that have occurred in the last 2 years, and underestimate the change that will occur in the next 10. So don't be lulled into a sense of inaction. You got to take the right action. You got to buy the right property at the right price in the right area with the right funding, and place the right tenant to maximize occupancy.